Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis video or currency breakdown. We're going to be looking at the USDCHF, USD Swiss franc. But before we get started to break down this chart and these currencies, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here. You guys are here find good, credible Forex content that can help improve your ability as a trader and help put some extra money into your pocket. Okay. Now, with all that said, let's go ahead and get started with this breakdown. Okay. Now, before we get started, you know what we like to do here at Black Forex. Before we get to talking about what's exactly physically going on in the chart, let us discuss the fundamentals of each currency. Okay, first let's talk about the Swiss franc. Now, the Swiss franc did start out the week last week with some poor news, but as the week picked up, we did start to see more positive news that goes into the strength of the CHF. Okay, so that's somewhat of a good sign. But we still have the dark cloud and inflation hanging over the Swiss nation. And on top of that, we still have the war in Russia and Ukraine is looking like it's starting to pick up based upon the news events that's being reported today, even though they're having table peace talks that looks promising. There's a lot of accusations going around about what Russia doing in the war, and we're starting to hear a lot more sanctions is going to be picked. They're considering putting a lot more sanctions on Russia to try to stop it, to try to punish it for its invasion of Ukraine. But this is the thing with these sanctions on the European nations, okay? From what we're seeing on the charts and what we're seeing from an economic standpoint, these sanctions are hurting the European nations, the EU, the major three European currencies, which is the Great British Pound, the Euro, and the CHF. They're hurting them more so than it's actually hurting Russia. So it kind of behooves me at the fact that they're going to continue to place sanctions in which they seems if I'm not an economist by trade, but I'm a smart man and I can see the writing on the wall is that I'm not going to continue to do something if I think it's going to hurt myself or hurt my people. And what they're continuing to do is placing these sanctions on Russia, and it's been backfiring, and it seems like if they continue to place sanctions, it's going to continue backfiring, and we're going to see continuing weakening of the major three European currencies, which is the CHF, the Great British Pound, and the Euro. And these sanctions could further the inflation of the entire European continent, which will lead it to a recession. Okay. So even though the CHF did have some positive news come out during the latter part of the week, right? We are going to still see a CHF acting as weak going into this trading week just due to all the geopolitics that's going to be affecting the European currencies. Okay. So with that being said, let's go ahead and get into the USD. With the USD, we see had a lot of positive news come out the prior week with the USD, with the unemployment, job numbers, and everything. And we had a lot of positive news come out the USD, more so than negative news. We did have some negative news come out, but we had a lot more positive news than negative news that came out, which is leading to a surgency in the strength of the USD. And we also had a temporary drop in gas prices. So that temporary drop in gas prices should also further the strength of the USD, because once again, if consumers are spending less money at the pump, that's more money that they're spending in the stores. More money spent in the stores is more money going into the economy. More money going into the economy causes the economy to grow. A growing economy makes the currency get stronger. Okay. So now, as that being said, let's go ahead and break down this currency pair. Right. So we was in a range prior for about 30 to 45 days. Then we broke out that range. So we came down some. Then we started to pick up in price. Then we started to come down some here. But here we're starting to range out again. And we're looking like we're having a pick up in price. Okay. So let's go over a couple scenarios of which direction the chart can go. Okay. We could see a continuation to here or even here before we start to see a range and then drop down some. We can see a range here, drop down to this area here before it continues to go up, or we may just range slightly and then go up. Okay, so what's going to be happening is one of several scenarios. Okay, we can continue to pick price up here before we get to here and starts ranging out, or here and starts ranging out and have a drop in price before we have a continuation to go up. We could continue to range out from this position here, have a slight drop down in price before we continue to go up, or we can just go up from this given point right here. Okay, because we're dealing with a currency that's strong versus a currency that is weak. So we are going to have a pickup in price. But with Forex, you have to play out several different scenarios in which price can pick up. Now, can we have a fundamental shift and have a total price turnover? It's possible. Of course, it's possible because anything is possible. Is it probable? Not too likely, especially due to the current state of the fundamentals dictating the strength or weakness of each respective currency. Okay. I hope that information was helpful for you guys. Happy trading.